protect a lot of myth, right? So the economy, if you ask me, and I've done as my opinion, I'll put a disclaimer that me, the economy has not rebounded. So what happened is, as we see, there's a lot of printing going on, so a lot of injection of money into markets, and consequences to that. So what they forecast is actually happening. Emerging markets are slowing down as a consequence of a lack of capital inflows into those markets. But what we will see moving forward in this presentation is that they are a lot more resilient than they used to be on our last financial meltdown. Emerging markets learned with that. So they have a lot more capital reserves than they used to have before. So they're like, okay, there has been a tremendous de-dollarization since then throughout the world. They know that every time the United States have a hiccup, they get pneumonia. So that's not a good deal. So they also, the traditional north-south trading that has always taken place, right? Advanced economies buying raw materials, adding value to it, turning into washing machines or microwaves or refined gasoline and selling back to South economies are not happening as much anymore. For example, in Brazil, in the early 80s, 80% of Brazil's revenues came from one country, the United States. So if the country was doing well and they had good political relationships going on, a lot of sales of goods and in particular mineral resources found their way to the United States. But for whatever reason, the condition changed. Brazil would experience a high, very extreme recession. So now it's about a quarter of Brazil's economy depends on the United States. They're kind of broken up into quarters around the world. In a way, it's good. There's no such dependency. But in other ways, it's not as great because this rich customer you have is always buying from you. Now they're not. So you got to depend on other smaller customers, right? So when you look at, when you pay attention to the video, you see that advanced economies has always had a tremendous impact on emerging markets because it allows them to rise when there was trade, but for whatever reason, some geopolitical issues, it stops them from continuing to rise. For whatever reason, that doesn't fit here in 45 minutes, right? We can continue the conversation. But what emerging markets start to do is like, okay, this is not good. We're depending on this one bank here, and when they wake up and they don't like us, we get penalized. Again, there are several reasons you can think of. Think of Russia right now. Think of China right now. Two different reasons, but they are being contained by advanced economies. Or think of Brazil or South Africa, for that matter. Not a good idea that people around the world just start converting their currencies into gold or silver. So you gotta hold them down. So what happens then is these countries, they are ganging up in blocks, such as the BRIC, or such as the CIVITs, or such as the ASEAN, or the Middle East and North Africa. And some of them are ganging up with each other to counterbalance the influence of advanced economies. For us, members of advanced economies, that can impact us. For us in the United States, for example, if the United States loses the global reserve currency status, that's going to be a major impact, right, for an American household, never mind businesses. I'm talking about just that fact alone, which, if you ask me, it's on the verge of happening. Now, when I say that, when you talk about global economies, it can be a few months from now, a few years from now. It all depends if we're going to war with somebody, whatever excuse we create, or we come up with some other form of divergence. But on top of that, you see there are several risks right now in the world, according to the World Economic Forum, that deters this progress. So we cannot only look at global GDP or look at per capita GDP in a particular country and say, wow, that economy is doing great. Yes, they are doing great, but when you look at the markets that they trade with, unfortunately, we don't trade with the entire world. We trade with blocks. Certain parts of the world are not doing so well for whatever reason. But look at, for example, according to the World Economic Forum, the notion we hear today that there is a slowdown in the Chinese economy, it's not likely. Well, think that China was growing at 10, 12%, but they don't have to grow at that pace. As a matter of fact, it's good for them that they slow down, clean up the house a little bit. I mean, rivers are not moving because of trash, right? You can't breathe there. I spend usually part of my summer in Macau, teaching at the university there and advising the students in their research. And I spent 3 weeks or so, 3 weeks and a half. I come home, coffee for a couple of weeks. And I'm in Macau, I'm not even mainland China. So in mainland China, lots of kids never seen the blue sky. It's only when they go to the country, like, what is that? Well, that's the blue of the sky, right? So it's only right that they slow down. Now, it's also not right that they continue to fudge GDP by building, ghost cities. That's a fake idea that there's progress where there's not. I would say the same for the United States. When you buy from among yourselves and sell among yourselves, that may impact GDP, but it's not real GDP. There's no real money coming in, right? So if we start trading among ourselves here, I buy from you, you sell to him, you buy from her, this class here didn't grow in wealth. We gotta get money from the other rooms out there, right? So if this is not likely, so then there are lots of opportunities out there. But you look at the Bloombergs, you look at the Wall Street guys or the Financial Times guys, they are saying, be careful, there's a heartland coming. But you look at lots of indicators that I wish I had time to dive in with you, it's not so. So there are lots of areas in China that you can still make a lot of money, develop a lot of businesses. So that shouldn't deter us. Financial crisis, yeah, we have it. It doesn't matter how we look at it, what policymakers are saying, it's not going to go away. If you ask me, it's going to get worse before it gets better. So if that's true, then we need to prepare for that. We need to do something about that. Now, to me, every time you see a crisis, there's also opportunities. I talk about events, risk events. Risk events are not good or bad. It's what you do with them, how you prepare for them that makes a difference. So we can capitalize on the financial crisis. Now, the idea for me here is, as business professionals that we are, how can we continue to push an agenda where it involves growth of businesses, involves the ability of continue to make change in a world that's ours and create opportunity for others. But we gotta watch for those trends. Geopolitical conflicts. We see right now, in the U.S., we are very aware of the relationship of the U.S. with Iran, with Russia, the whole issue in Syria. And that's problematic because it deters the movement of goods around the world. If you were an American business selling to Russia, right now you're having problems because there are difficulties in exchange those trades. Same thing in Iran, right? Economic disparity, we see more and more of that, as I was mentioning yesterday. Unfortunately, when you look into capital markets, when capital markets are poured into the world, what happened is, and I'm quoting Mark Faber, if you're familiar with him, he talks about the fact that capital markets, they infiltrate markets around the world, much like you dropping honey on a tabletop. When you drop honey as opposed to water, you start piling honey right here, what's going to happen is it takes a while for that honey to roll and fall off the table. It tends to accumulate in the center. So those close to the injection of this honey or money, it rhymes, so they take advantage of the process. Bankers, they take advantage of the process. But Main Street, I was talking about Main Street and Wall Street, or if you may, you and I, as small business owners, private corporations, don't get to see that honey or money too soon in the process, if at all. So that ends up causing those disparities, not only among business within a economy, but also countries. Because what you see is, look at what the ECB has been doing in its own printing of money, and look at what the Federal Reserve Bank has been doing in the U.S. with its own printing of money. It's benefiting those close to the pump, those close to the faucet. Those far away from it, they don't. They're the ones losing their jobs. So I say that in the U.S. you have two economies: the Wall Street, those connected to the big companies, the Fortune 500 companies, and Main Street. If you're not part of the Wall Street,
you're doing 2 full-time, 1 part-time, so you can have make ends meet, or standard of living being jeopardized. Global governance failures, that's another consequence, in my view, of all these other trends. Because what happened is government can't perform. Unfortunately, we see the situation in Syria, which is a lot more complicated than we can discuss here. But if you dig in, it starts as you look at some of geopolitical conflicts, financial crisis, and so forth. We will have to continue to deal with that, particularly in emerging markets, and even more so in frontier markets, as you will see. So there are lots of risks out there that we business people need to deal with. But there's also, as I mentioned before, opportunities in all these areas. So for us here, asset price collapse, it's happening. Many of us, many hedge fund managers may not want to realize, but by the same token, there are areas of the world, there are industries in the world that the return on investment is huge. I was just joking around, and I asked them if how familiar they were with Lesotho, right, in Africa. And some of us, we don't even know where Lesotho is, because you wouldn't think it's a tiny little country in the middle of South Africa. Oh, it ended up being right in the middle there, right? But Lesotho today is the biggest exporter of pot, right, of marijuana out there in the world. And if you were to invest on hemp.com, just from last year to this year, 525% return on investment. What an opportunity, right? So imagine you put $1 million as a hedge fund manager, or 10, into hemp. So right now you're like, whoa, opportunities like that, there are lots around the world. Solar in the Middle East, for example. Dubai says they can power the world 3 times over. Maybe it's only 1 time over. Maybe it's only half time over. But there's a great opportunity over there. So for us, the challenge is to look at this world and like, okay, there are risks here, but where are there opportunities? And look into it. So, for instance, I don't have the whole day, right? But if you look for each one of these, if you were, as business professionals, to look at each one of them, look at your field, look at what is in it for me? Where can I capitalize on it? How can I advise countries out there in the world about dealing with the financial crisis? And then you have a few other areas here that have been identified. Illicit trade, for example. If you have read New York's Stealth Nations, I mean, if you start to think about the industry of the knockoffs, the falsified stuff that we buy on sidewalks, when you put them all together, according to him, it's the 2nd biggest economy in the world. 2nd biggest. So, you have United States, an $18 trillion economy, and this one here, according to him, it's close to 9. China, 6.5. So, it's a lot of money here. Now, I'm not suggesting you to start a knockoff factory, all right? I'm not saying that. What I'm saying is, this is a risky proposition, because nowadays there's even a better class of knockoffs. That's the replicas, right? So those are real but not real. The knockoffs are not real but with poor quality, right? So go figure. Now, as you see, the World Economic Forum says, okay, the most interesting part of this all is that, or exciting, depending on who you are, is that you cannot look at these risks individually, because there is an axis among them, right? So you look at, for example, global governance failure, you cannot talk about illicit trade without talking about, organizational crime. These guys are the one pushing this. It's not some Brazilian, some Nigerian, somebody in China putting a bag in their back and selling some goods out there. Somebody's condoning that. Somebody's protecting that. Somebody's funding that. So, fragile states. You can talk about the lack of law enforcement. You can talk about government that turns its eye away because, well, you need to eat, might as well eat that way, right? So, and corruption, of course. You can always pay somebody to turn the eye away, right?